So, what do you mean by commercial bank? What are commercial bank? Commercial bank is a form of financial organization that regulates all action related to money deposits and withdrawals. So, when we talk about money deposits and withdrawals, that means we are talking about direct dealing with public, or we can say our general customers, the general public. Okay, so commercial banks are the banks who mainly deal with general public, who mainly deal with the general customers. And what are the main functions they do? They mainly do the money deposits and withdrawals, okay, for common public, okay, as well as investment loans and other similar operations. So not only money deposits and withdrawals, but they also invest in form of loans, but again to the common public. So they regulate all the actions which are directly dealing with common public. So let's see that what are the main features of commercial bank. Commercial bank, they first thing what they do, they accept the deposit and facilitate payments. So they accept the deposit from the public as well as they also facilitate payment whenever it is demanded. Whenever public come and ask for the money for their need, so bank should be able to pay back whatever money they are demanding for from their account. Then it is profit oriented institution. This is a very main feature of commercial bank. Whereas all other banks whose aims might be different, but in case of commercial bank, the main aim of the bank is to earn profits. Okay, of course they have the other objectives like economic development, helping the country to grow, generate employment. There are several other objectives, but they are profit oriented institution. They mainly function to generate profit for themselves or to earn more profit out of deposits and investments. Then next, they are regulated by central bank. So they are supervised and regulated by whom? They are regulated and supervised by our central bank. And who is central bank? RBI. So they are regulated and supervised by Reserve Bank of India. Next feature is risk management. They are one of the major institutions of our country who helps the country during risk. Okay, they help in risk management. It can be economic risk, fiscal risk, or other types of risk, inflation risk, whatever risk we have in our country which act as a hindrance for our country's development. Bank come as a rescue for those kind of risk, and they help in maintaining the risk of the country, and they try to also help out the country in the growth. So they manage the risk and take regulated actions. The next one, lending funds. Lending funds means here we are mainly talking about loans and advances. Okay. So another feature of commercial bank is to lend the funds. Whatever fund which is collected here by the general public will be lended to the investors, to the people or the companies who are in need of funds. So they lend the funds to people who are in need, okay, in form of loan, in form of advances. Then agency function. They also act as agent for the general public. Now, why they need to be agent? Whenever we are transacting with someone, let's say this person A want to give some money to this person B. So B has sold something to A and A has to give that money to B. But the money, how A is giving B? A has asked the bank to pay to B. Now here, in between the transaction which is going on between A and B, this bank is acting as a agent. Okay, they facilitate the transaction. So bank also do the function of agency. They act as agent for their customers. Okay. Then liquidity maintenance. One of the main feature is to maintain the liquidity to meet the need of that hour. Okay. So there are various tools to maintain the liquidity like SLR or CRR, cash reserve ratio or statutory liquidity ratio. These are few of the tools which maintain the liquidity in the bank. Not only bank, we need a lot of funds to run our day-to-day lives. Even the country also need a lot of fund to run its day-to-day operation. For all these things, we need funds which are easily available, which are readily available. So that is why when we are in need of funds, we want our funds to be in liquidity or liquid stage. So banks are responsible to make sure the funds are readily available. So they maintain the liquidity. And the last feature here is economic development. Banks are functioning to develop our economy and to maintain the flow of funds in our economy in a proper way, so that all the economic development like infrastructural development or any other kind of development which is going to help our country to grow, they facilitate funds for the same. So these are the features of a commercial bank. Let's move to what are the functions of commercial bank. Commercial bank has two major functions. One is primary function, another one is secondary function. So we are going ahead with the primary function first. So let's see what is the first primary function. First primary function is to receive the deposits. So if someone comes to a bank to deposit their funds, bank has the responsibility to accept those funds and deposit it. Okay. So if general public comes to a bank and asks them to deposit their fund, bank has to deposit the funds in their account. Of course, bank has their own guideline that who can deposit how much of fund, and after crossing a certain limit of depositing a fund, then customer has to furnish few documents. Like for example, if someone wants to deposit more than 50,000 of cash, then they need to furnish a PAN card or they have to submit PAN card details. So to avoid the illegal use of funds or minimize the illegal activities like money laundering, they take care of these restrictions, but they cannot deny of receiving the deposits. So they take the deposits from the customers. Then savings deposit. Not only receiving the deposit, they have to keep it safe. They save the deposits in the account and plus they give some interest. Okay. So here they receive the deposit to safeguard. Okay. They safeguard the deposit and here they save the deposits in the account and give some interest on that. Then fixed deposits. Okay. In saving deposits, we have savings bank account. Okay. Fixed deposit, or we know it as FDs. Okay. FDs are the time deposits. We do it for a long term. We put the money in those our FD account and keep it for a particular period of time, ranging from 1 year to 10 years or so. Okay. So depending on how long you want to keep your funds invested in FD, the interest rate varies to it. Okay. So, but in savings account, you can have your account and whenever you want, you can withdraw that particular amount from your account. Like for example, let's say in your account, you have 1 lakh rupees, you want 10,000 out of it. So you can simply withdraw. But in case of fixed deposit, if you have 1 lakh, you cannot withdraw 10,000 out of it. You need to close your account by withdrawing the full 1 lakh and you have to bear some penalty over it if you are withdrawing before the maturity period. So it is fixed for a time period, whereas in savings account you keep it for lifelong and wherever you need you can take out the required amount out of it. The next one is current deposits. On current deposits, FD you get some interest. For savings deposit also you get some interest. In current deposits, no interest. You don't get any interest in the current deposits. And current deposits are mainly used for the business operations. Okay, mainly this function is used for the business operation where you have to do day-to-day basis payments. Okay, so you don't keep your fund there for saving that and or for a long term. You're keeping your funds there just to facilitate your business operations or to let the business run with the flow of funds. You have to pay someone and you have to receive funds from somewhere, then in those cases you need to have a current deposit account. Okay, that's why you don't get any interest on that. Next one, loans and advances. So after taking deposits, now bank also provides the facility of giving loans and advances. Okay, loans are for long term. Okay, long term and on a very high interest rate. Advances are mainly given for short term. Okay, advances are mainly given for a very short period of time. So let's say there is a business who has an account with one particular commercial bank. Let's say we name it as SDFC. Okay, so they have the account there. Let's say they have a current deposit account and they have to make a payment, but they don't have a sufficient balance currently in their account to make the payment. So do you think they have to stop and wait till the funds are available? Till then, probably the business they are getting will be gone. So in that case, they request the bank to allow them to have some advance, and bank grant them some advances which they have to pay back during a very short period of time. So in those cases, they get not loan but advances. In case of loans, in sometimes you have to keep something as collateral, but in advances that is not needed. That's why it is short term, loans are long term. Next, credit creation. I mean, what's the difference between now loans and creation of credit? Loans, it is a process where you give or send your funds to the people in need. Okay, you give the loan or advance. But in case of credit creation, making sure you have enough funds where you can facilitate with the credit facility. Having enough funds with you where you can facilitate the function of what loans and advances for others. If you don't have funds, of course, you cannot go for loans and advances. First, you need to create the credit environment by having sufficient funds. Okay, you need to have sufficient funds to create the credit environment. Then last one, collaterals. Collaterals, whenever you are going with for loans, okay, you need to keep something as security, or we can say guarantee with bank. How bank is going to believe you that you are going to pay back the amount you are taking as loan from them? You need to keep something with them as a collateral. So keeping collaterals is also a primary function of commercial bank. So what all we have seen, that these four are concentrated on deposits, means keeping your funds with bank, and these three here are mainly for lending, that how funds are lended to people in need. It can be general public or it can be people who are doing businesses. Now let's go to the secondary function. In secondary function, the first one is providing lockers. So banks also provide feature or facility of having lockers. So there are variety of lockers which are available in banks. So what's the purpose of locker? Let's say not only money, but you have some valuable which you want to safeguard, which you feel that keeping at home is quite risky. It can be your gold, precious ornaments. Okay, it can be some important documents which you think a bit risky at keeping to your home. So you want a better, safer place where you can keep this. So to facilitate safer place for your valuables, banks provide locker facility. So for locker facility, there are different a kind of requirement which you have to fulfill to have a locker. Banks provide different sizes of locker, as well as there are the banks, they also ask you to open a fixed deposit with them, so that it's a guarantee for them that you are keeping your valuables there. Okay. So based on what size of locker you are taking, you have to do the requirement having a particular amount of FD with the bank. Okay. So this is one of the extra benefit or extra facility which bank is providing you. Apart from keeping your cash, you can keep your valuables also safe. The second one, exchange of securities. Banks also provide exchange of securities. People trade in various type of securities, starting from government securities to shares, debentures, or there are so many other securities. Okay, bills of exchange also. Banks, they provide a facility of exchange. Okay, let's say I'm taking example of bills of exchange only. So if you have a bill which you want to in cash on a urgent basis, you can take that bill and go to the bank and ask them to encash it. So they are going to charge a marginal fees for it, which can be deducted from the bill amount, and you are going to get the encashment of that bill, and later can pay the amount to the bank directly instead of you, because you already got the cash. So exchange of security, so that they can provide you instant liquidity. Okay. So you can buy or you can sell your securities, exchange your securities with the bank to get the liquidity. Then dealing with foreign exchange. Banks also deal with the foreign exchange. So if you want to get the foreign currency or you want to exchange some currency, you have to go to bank. So bank has the funds where you can exchange your currency and get the desired currency from there. So this is again a miscellaneous function which banks provide. Then bills of exchange. As we discussed, exchange of securities, similar way, bills of exchange. Bills of exchange can be dealt with the banks. Now, here two features known as factoring and forfeiting. Okay, these are two functions of banks which are provided to the people, factoring and forfeiting. So there are few subsidiaries of bank known as factors who deal mainly with the bill of exchange transactions. Okay, so companies or small businesses, they take help of factors to get the funds from bill. The next, bank as an agent. Okay, as we discussed that bank also act as a agent between the parties. If there are two parties and they have to transact in the monetary term, then bank as an intermediary facilitate the transaction. They help in flow of funds, they help in payments, they help in receiving funds from others. So till now what we have understood, that people come deposit the funds and withdraw it whenever needed. But bank also helps in transferring the funds from one account to another. You just need to give few details that to whom you want to send money, and bank is going to do it on behalf of you. They are going to send the funds. So you don't need to do a lot of hard work getting the funds into cash, going to the person and paying. Instead, you simply can fill a form and get the funds transferred to the particular person's account. Then collect utility services bill. If we have to pay electricity bill, if we have to pay telephone bill or so, nowadays all the facilities are available through bank. You can directly do the payment or any kind of utility service which you are using and you want to pay the bill, banks are doing on your behalf. There are so many automated services also where you don't need to even click few buttons or fill a form. Automatically from your account those bills will be paid. So you don't need to keep recalling that which bill is pending. So banks are doing all those tasks on behalf of you and they are providing this facility so that you can have a hassle-free life. And the last one, maintenance of secrecy. Banks do not disclose the details of their customers to any outsider or to anyone who is not related to you or your account. So your details, how much money you have, or to whom you are transferring. Any kind of detail which relates to you is not disclosed to anyone. It is kept safe with the bank. So, they do not disclose, they keep your details secret, okay, confidential. They keep your details confidential.